Almost no beginner trader focuses on risk, position size, and survival long term. In this video, we're going to use two PulseFlow signals traded by two very different traders, MoonBoy and Marcus. I think you know where I'm going here. The first signal is FORMUSDT, a VWAP bounce bearish signal, stop loss 4.7. The second signal is KERNELUSDT, wider 13.25% stop loss, a VWAP bullish this time. First, we're going to be MoonBoy and take both of these trades. I've lifted some of the signal data in here. This is where the alert came in on the yellow arrow, and MoonBoy cares not a jot. MoonBoy is to the moon and nothing less. He wants to be rich, and he wants to be rich today. So he goes in instantly, sets his stop loss up here at that 4.7% and thinks, F it, I'm going in. And instantly gets stopped out. He moves on to KERNELUSDT, recommended stop 13.25, but he thinks, I'm going 20x leverage, 13.25, I'd get liquidated. I'd best lower my stop loss. Yeah, that's much better, 6.98, that's much safer. And he goes in. And he gets stopped out. How many times have we all done this when we first trade? We just want to make money. We're focused on profit. We think that's why we're here. Now we do the trades again as Marcus. Now Marcus has been around the block like you and I have. We've had all of these liquidations when doing high leverages. We've had lots of losing trades where we're stopped out because we didn't plan correctly. But Marcus is like you and I now. He's wiser. He's been bitten in the arse too many times. So let's start those trades again. Okay, now Marcus gets to this alert and he takes a look and he says, okay, look at that huge bearish fair value gap with a breaker structure. That's got to contain a ton of liquidity. Price has to come back up into that. Then he starts adding things to the chart. Let's do points of control. Okay, the point of control from yesterday is way up, and actually the point of control from the other day is right at where I put that entry, or where MoonBoy put the entry. So anyway, this is the next step. Okay, so here straight away you can see these mitigated bullish order blocks become bearish breaker blocks. So straight away we're looking to lift our stop above there. Likewise, what we're wanting it to do is to come back up into here and go back down. So I'd be looking for an entry back up here, lowering our risk back to where it was before. Now let's look at different time frames. Oh, look at this on the 4 hour. The lower point of control is exactly in that order block, and I just happen to have placed my target profit at the top of the order block. Now I could put it into that order block, but I'm not going to do that. So now Marcus's turn to trade. Did he get in? Did it shoot back down straight away? We don't chase. And here we are. It hasn't got to our profit target yet, but we're going to come back to this. Let's run the next trade first. Marcus gets to this at the alert time and once again goes, I need some other confluences. I need to understand what the institutions are doing. Back to the 15-minute order blocks. Okay, so straight away I'm going to lower our stop down here a little bit because Kernel had a 13% stop loss right within our signal. So we need to be safe, but at the same time I want a lower entry. Maybe it's going to come down and do a liquidity sweep of that order block. We don't know yet. But we're a safe trader. We're an experienced trader. We don't care if we miss it. We do our planning. We're looking for this. That's what we want. And we don't go in when it comes down. We're going after it confirms the reversal back up. Now let's look at profit targets. We have this point of control here. Oh, 4 hour chart. Bearish breaker block. Like before, I'm a conservative trader. Now we let it fly. Did we get in? Did it come back down? Oh, whoa, we got in. Okay, so 2 trades, as of yet, not reached profit target. Is that a bad thing? No, it's not a bad thing. Now we talk about the next part of trade management. You begin to see in a minute why I placed more points of control on the chart, because they are natural profit target levels. This might be too soon, but this one, you would suggest taking 50% off the table. Lock in those profits. It's not quite got down to your profit target yet. If you're still confident that it's running, you could take 50% off the table and leave the rest to run. Trade management. Kernel, we had a bigger stop loss. So if I was trading normally with $1,000, I might decide to lower that down to 500 or 300. We call this position sizing. Also, if you're using leverage, MoonBoy was using 20x leverage. When I use leverage, I use no more than 5. Sometimes 2, 3, 5, depends. So Marcus here is on 5, but he might decide to go down to 2 because that's a risk. So what he's done is he's lowered his position size and lowered his leverage. Trade management. MoonBoy never considers risk. He's too focused on the moon and getting rich quick. Marcus has been at it a long time. He knows that never works, and that trade discipline is the essential part of becoming a profitable trader. Learn your skills first, learn how to trade, then worry about profits. In that order. So risk mismanagement turns good setups into bad trades. To finalize, MoonBoy may get lucky in his early days, but at some point, sooner rather than later, he's going to get wrecked and be liquidated and just completely blow his account. Marcus understands that this is a marathon, not a sprint, and that trading is a discipline and a skill learnt over time. And the key takeaway is survival and consistency matter much more than a single trade. Okay, you can watch one of my videos down here. Please subscribe, like and share, and I'll see you in the next one. Bye bye.